In this illustration, I'm going to go over the exponential moving average strategy. And this is a strategy I consider, for those that have retirement accounts, 401ks, IRA Roth accounts, because it is long term in nature and it takes into account, as indicated here, weekly. And this illustration is going over the Dow Jones Industrial Average. In your assignment, specifically, is not the Dow Jones, but it is the S&P 500, and it will be similar in nature. And here you have the exponential moving average. We're looking at a 15-week and we're looking at a 40-week average. And again, the EMA is really a moving average. It's an average. As it differs from a regular moving average, is that in a regular moving average, we have like 1, 2, 3, 4, 5, and we'll take the average of, as I just mentioned, 1, 2, 3, 4, 5. The average would be 3. With a simple moving average or a regular moving average, each of the values will have an equal weight. Like in the case of 1, 2, 3, 4, 5, in other words, each of those values, each of those numbers will have a weight of 1/5. Well, when we're dealing with an exponential moving average, we are giving more weight to the most recent value. And from my standpoint in the investment world, is that should be more relevant. What I know will say about the market, whatever determines price within a market, say in regard to the Dow Jones Industrial Average of 30 stocks, today should be more relevant than, we'll say, yesterday or the day before, just simply due to the fact that there is more information readily available today about the company. And when I'm talking about today about the company, I'm talking about the current environment. I'm talking about the current prospects of the company. I'm talking about really the current sales forecast or earnings forecast should be more relevant today than it was, we'll say, yesterday, a week ago, a month ago, a year ago. So that's why I use an exponential moving average. So what I want us to do right now, what I want to go over with you, is really just to kind of look at it. And as I made mention of the fact, this is a weekly moving average. The reason I don't really specifically focus on a daily average is simply due to the fact, in my opinion, daily has a bunch of noise in it. Just put it that way, it's noise. Weekly, we kind of smooth out the daily chatter, the daily noise that's going on within the market. So this is a chart that goes back 10 years, and I think it's relevant just due to the fact that, in other words, the last bear market that started in January of 2008 and ended in March of 2009, whereby the market in that period of time went down approximately 45 to 50% in value. Now that was a tremendous decline. So since March of 2009, we've had a bull market, and some of you are, I'm sure, know how we define a bull market or what a bull market is. When I refer to it, or anybody refers to a bull market, we're making reference to a rising stock market. The trend is up. And of course, that's part of the assignment, to identify the trend. Is the trend up or is the trend down? If the trend is up, we would consider that to be bullish. If the trend is down, we would consider that to be bearish. And the reason why Wall Street refers to an uptrend in the market as bullish is just the way a bull attacks. A bull attacks by thrusting its horns, thrusting its head down, and lifting it. A bear attacks by its claws, by clawing down. So there's a historical perspective there, trivia, as you might want to refer to it as. But anyway, let's get back to the specifics of kind of looking at utilizing the 1540 EMA strategy in making investment decisions, specifically identifying if a trend is up or down. So, as I pointed out, in some of the documents that you have, I indicated that, in other words, the trend is up as long as the 15-week EMA is greater than the 40-week EMA. The trend is down. The trend is down if the 15-week EMA is below the 40-week EMA. Now let me just indicate to you on this particular graph, and the price is hidden. Price is hidden. All what I'm focusing in on are those two moving averages, the 15 and the 40. Down here, ignore that. That's our MACD. It's a momentum indicator. I don't want to get into that. What I want to do is focus on the EMAs. Now, as I pointed out, in other words, you can see here, the golden line is the 15-week, the blue is the 40-week. And as you can see, that in other words, that we go back into 2008, you can see that the 15 was beneath the 40. Oh, trend down, bear market. And as you can see, in the middle part, early middle part of 2009, what happened? We had a cross, meaning, of course, the 15-week went above the 40-week. And that is the point of reference whereby we would say, oh, the market has gone from a downtrend to an uptrend here in at 09 because the 15 weeks above the 40 week. And it maintained 15 above the 40, meaning the trend is up, the trend is up. And then we had a small deviation here in the middle of 10. And really from that standpoint, the 15 just hovered near the 40 week. So again, trend up, trend up, trend up, trend up going into 2011. And then in the early third quarter of 11, we had 15 penetrated the 40. Bingo. In other words, at that particular point in time, one would consider, we are going from an uptrend bull market to a downtrend bear market. Well, of course, it didn't last long, and we would have gotten back in the market, right? 15 above 40, 15 above 40, all through 2012, all through 2013, all through 14, and then in 15 once again, we had a shift. 15 went below the 40. Downtrend, downtrend, downtrend. And that lasted again from early third quarter of 2015 into the first quarter of 16. And since 2016, what? 15 has been above the 40, and we would consider that to be an uptrend, bull market. So, in regard to the Dow Jones Industrial Average, the trend is bullish, the trend is up, because the 15 is above the 40. So that is what I am making reference to when I'm referring to an exponential moving average strategy. Really for long-term investors, as I pointed out, for retirement accounts, and that would include your 401ks, 403s, your IRA accounts, and Roth IRAs. So hopefully this assists, and hopefully this helps you out in this week's learning goals.